Welcome to Loaded and Rolling. I'm your host, Thomas Watson. There's been a lot of stuff going on in the news lately, especially if you've been keeping an eye on trucking or the general supply chain. But one of the fun things is that as we're hearing all of these wonderful stories, it's important to look at the data that goes behind them. And one of the big ones has been some recent data released by Motive talking about cross-border movements, especially looking in and out of the port of Laredo specifically. And then we're also looking at some stuff coming out of Canada. So we're going to talk about that today for the first half. And then later on, there's some hot button issues Motive has also been working on. And one of them is truck parking. So going to get a two for today. And we're super excited because we're welcoming back Hamish Woodrow. He's the head of strategic analytics at Motive. And Hamish, it's always a pleasure getting to catch up. I'm used to the big box retailer index, but y'all have been cooking up some extra stuff going on. Welcome back.
Thanks for having me back on the show.
And talk to us a little bit about what goes behind this, because I think this is really cool looking at cross-border cargo, especially Port of Laredo in Canada. Tell us kind of what goes behind when you're looking at this data set. Where are you all pulling it from, and give us the lowdown.
Yeah, so tariffs is the hot topic. What's happening at the southern border is very present for business leaders at the moment. So what we're looking at is we're looking at our network of connected devices. We have more than 100,000 companies using our technology, and we're looking at the activity happening within the geofence, especially around Laredo. And Laredo's important because approximately more than 40% of all the goods coming in are coming in through Laredo. So it's a big indicator as to what's actually happening in terms of demand and activity when it comes to cross-border shipments. And when we look at it, we're not just looking at the border crossings themselves, but we're also looking at the distribution warehouses on either side of the border, what's happening there as people are restocking and putting things at the border and moving them out to other locations. So, big headline from that is we've seen about 48% year-over-year increase in activity through most of March in Laredo compared to January. We see huge increases, almost like actually when we look at it as if we've never stopped the holiday period. It's just been continuing through into present day, and that's just been driven by, I guess, the fear of the fear of tariffs coming into play.
And that pull forward is really fascinating because, it's really hard to get the actual data. You hear kind of from ports and stuff, that's a little bit of a lag time, but having the actual telematics, it looks like the first Q1, everyone is still pulling stuff in. Tell us a little bit, break it down further. Were there anything specifically that folks were pulling in that made us have this standout bump compared to typical seasonal expectations?
Yeah, so when we combine our data along with the data that's registered at the ports, we see certain categories really seeing a boost at the moment. Computer-related parts are up 48% year over year in terms of the imports. Now, part of that is the growth that we saw in 2024. We've seen a lot of capacity in terms of manufacturing capacity come online through 2024. We ended the year 28% up year over year. But then now with the fear of tariffs that are coming in, the pull forward of demand, trying to get things in before any possible changes to the cost basis of these products, you saw computer parts specifically go and have a very strong Q1 in terms of imports. Other areas like vehicles and like large scale manufacturing goods saw approximately like an 8% year over year increase. So they're seeing increases, but also the lead times on those manufactured goods is going to be longer. It's going to be harder to just turn on extra supply to meet the current volatility that we're seeing in the market. So we're definitely seeing slightly faster moving goods seeing the biggest growth during Q1.
So it's almost like a wait and see approach. I'm going to have a buffer instead of just in time. I'm going to hoard and stockpile that way, regardless of the amount of the tariff, or if it finally goes in, then it's going to be something where at least I'm covered and I'm more worried about paying like warehousing fees or something.
Yeah, and more than anything, it's constraining uncertainty. Uncertainty is what prevails right now and so you just see with the headlines happening every week, policies are possibly shifting constantly. So what is the most assured thing that people can do is try and bring in volumes based on a fixed cost basis that they know today. And so that's why you've really seen a rush of shipments unseasonally in Q1. I actually expect the whole year to be quite unseasonal as companies try and reel between different tariffs possible tariffs and really try and take the best decisions they can with the limited information that they have to make those. So I think it's we're in this period of volatility right now. Companies, importers are trying their best to kind of constrain the risk for their businesses, and that's why you saw this huge pull forward. As soon as there was a lot of fear, you'll see a lot of people trying to bring things in at a known rate, at a known cost of goods, because margins will get compressed, and it's hard for these businesses to sometimes absorb that.
And looking at Canada as well, this was a really fun one. There was looking at the images in the release. When you look at the Laredo computer parts, big jump compared to the previous ones. In Canada, looking at total U.S. import volumes over the last 3 years, as of January, they saw a huge bump as well. Is there any other details in terms of what our northern neighbors and trading partners are going? I'm assuming it's all maple syrup.
Well, people have the things that they're most important to bring in from Canada. So, maybe syrups is one of them, but definitely what we've seen, 15% increase in the amount of goods coming in January from Canada. Now, Canada's an interesting one because when we actually looked at it last year, in general, like compared to Mexico, we've seen Mexico import volumes grow year over year, really since about 2019, and they really exploded in 2024. That's where the number of 28% year over year increase is where we landed with Mexico in at the end of last year. With Canada, it wasn't the same story. It was actually slightly down, a few percentage points down, about 5% down. But in general, it's been kind of flat. So as Mexico's taken the number one import position in the US, overtaking China, Canada's just stayed fairly flat. And really, this is a big change, a big movement in import volumes when you look to January in terms of what's happening at the northern border. And so this is quite unprecedented in terms of shifts of volumes. And I think, again, it's as you're looking towards certain manufactured goods, trying to get that all in based on the anticipation of tariffs that have continually being pushed out. But the one certainty for companies is what you can do today. And so, especially with capacity still being available for shipments in the market, we're able to bring things in relatively quickly still. And you're just seeing that that pull forward. Now, the interesting thing is now what's going to happen through Q2 that we've pulled forward so much inventory? And that's really the big question that's being looked at now.
And that's what I'm curious as well. Looking at expectations, we have the inventory buildup as they want to have higher stockpile of goods. But is there a concern, I guess, that we may just see a slump in the summer when it used to pick up because we just decided it's like a sugar high and now we're crashing? Or do you think that this will be a sustainment, or is it too early to tell? What are some of these early thoughts as we're trying to look ahead, with April and the beginning of Q2?
Yeah, so I'll go back to one thing. It's going to be unseasonal. Like, I think you're going to look at the last few years, and it's going to be really difficult to predict exactly where we are going to be because we've had such a pull forward in volumes in Q1. And we also have the anticipation of somewhat weakening demand, especially if cost pressures become an issue here. And so what we're going to go into is a high period of volatility. I think when you're going to be looking at month over month trends, you can actually see large fluctuations in volumes. And so what we expect probably with this pull forward is, depending on exactly what the policy shifts land, you'll likely see a drop off as people adopt a wait and see approach, especially, when we look at the global trade volumes, people will wait to see how policies land in a month's time. And then they're going to probably start running with, they'll have built up the inventory just now, and they'll start running on very low inventories to try and manage kind of their cost basis and figure out what they're going to do if tariffs remain sustained and high. It's going to be a complicated situation for many companies. So, main things for me is high volatility. Companies got to plan for a very changing cost landscape. And right now they're bringing inventory. I'd say there's another risk out there which could come up, which is, have they overstocked? And if we go into a weakening market, is it a bit of a double-edged sword of how much these retailers brought in prior to the demand actually taking place?
I'm kind of curious as well because consumer behavior and buying patterns, it would make sense I need to have a buffer if I'm going to have to pay more and I don't want to always pass it down, use it or lose it. But do you think consumers, is there any kind of economics from an economist standpoint I mean, should I just go out and buy all my Timu stuff, or is this one of those things where we'll see a demand, a consumption side boost as well, as they're kind of thinking the same way, which is this is very uncertain. Maybe I should buy it now, or do you think maybe consumers would take a wait and see?
I think at the moment there'll be wait and see because it's not yet hit. You'll have this pull forward that's almost this stockpile that gives a little bit of time for manufacturers, retailers to figure out what they're going to do in their pricing. And I think the reality is once we kind of get out of this period and actually start consuming and having to bring in things at certain tariffs, it's going to be a balance of probably some retailers taking on some of the burden and passing it on, and that passing it on already on a consumer that may eventually be tapping out. It may decrease demand, and it's going to be a fine balancing act for a lot of companies to try and figure that out. What is the right amount to pass on to consumers, and how that will impact their demand. So that is going to be, I think, the story as we kind of look towards the session, especially the second half of Q2 going into H2. I'd say that that's one of the main risks sitting out there for the industry overall is if you're trying to look too far in the future, which most of these retailers are, there's a chance that you're going to miss on the forecast and you're going to be stuck with a lot of costly inventory sitting in your shelves.
Yeah, and I mean, for looking at the trucking side of the outlook, I mean, it felt like before the tariffs went in place and we started really pushing back, we were expecting recovery by second half of 2025. If we'd had this conversation in December, this was not on my crystal ball that we would have this.
Yeah.
When you're looking at leading indicators and trying to give a freight outlook, luckily I would not want to be the economist right now because it feels like there's so many different signals and noise, and depending upon the day that we're, by the time a listener is listening to this, something could have radically changed. What are things in addition to, like, I love the big box retailer index? Some motive is measuring actual movement. So having that data, is there any other kind of things that you're looking at that may be like a circuit breaker to say, hey, look, here's a green shoot, or here's a dried out cactus, or whatever the equivalent of the opposite of a green shoot is?
Yeah, so I'd say it's predictions are difficult for the trucking market right now because, I feel like we've gone through, in reality, 5 years of unrelenting major disruptions to the market from, booming demand to skyrocket diesel prices to cratering demand to some of, the biggest contraction that we've ever seen on history. And we were kind of at the bottom, and that's where we are just now. Now, the question is, I think to a certain extent, we're in a high period of volatility that could impact specific companies, especially with high exposure to certain routes and certain types of goods. You'll start to see some issues there. I think especially because the predictability of revenue streams may be disrupted as this pull forward will change the outlook for the rest of the year. I think that there could be some trouble on that side for certain companies. But overall, when I think about trucking in terms of resilience, um, a couple of fundamentals. Regardless of where the goods are coming from, goods will continue to be moved 80% of the time by trucks in the foreseeable future. We've had a massive contraction in the market, and we're at levels where, to a certain extent, it can't go too much further down in terms of like just the overall capacity. There's a fundamental capacity required to move most goods in the US. And although we'll see marginal movements that will maybe keep prices where they're at, not maybe see the same lift that we were expecting in H2, there is a certain amount of limits to the bottom. So I still have hope in terms of we're not going to get into a worse situation than we have been when we look back to the last 18 months. But it just may be that there's not enough tailwinds to kind of boost the industry at the same rate that we were all hoping would happen coming into the second half of this year.
Well, it's like there's nowhere to go but up. It's kind of like the Goldilocks zone of trucking capacity. And so we've been so near the bottom of too cold that even getting close to just right now, there's some fungibility in the numbers. Is that something where, and here's my wild take, I'm assuming we could have a situation where the trucking economy, if enough capacity leaves, can actually see an upswing, even if overall aggregate demand goes downwards, right? It's kind of like it's like outrunning a bear. I just need to be faster than the other trucking company.
Yeah, and to a certain extent, even if we look at the wider economy, trucking's been in this recession for a very long period of time. So it's already been suffering for a long period of time. And like you say, a lot of the excess capacity has already gone out the market. You know, we had more than 60,000 companies net leave the industry last year. And so to a certain extent, we could continue to see a bit of volatility. I think, especially companies with limited balance sheets may suffer in an unseasonal and unpredictable environment. And so, one of the strongest things we're talking about is resiliency of businesses, good visibility of your cost centers, continuing to maintain and use tech, especially to kind of maintain your operating costs as low as possible, so that you can kind of manage what you can control, because you can't control what's happening in the macro environment. You can only like ride with whatever is being thrown out there. And so that's kind of the main consideration we have. I think you could see that with such volatility can be upsides for the industry. You can end up in a time where you will see huge demand coming back and the capacity crunch leading to increasing prices. But that's a really hard to predict in terms of timing, just given the volatility week to week with decision making. You kind of have to live in the here and now when it comes to the information that's available to you.
Keeping the nose to the grindstone. And speaking of things trucking companies can control, turnover and retention is important. And I think the truck parking situation is another segue. You all recently had some stuff talking about truck parking or have made comments on it. Tell us a little bit about how Motive in the truck parking situation is going, because I know it's a huge thing and it's really great when we get more attention to it, because I think there's a critically underfunded parking for trucking, which has been a problem for, I think, at least a few decades.
Yeah, and so with the recent bill going through Congress right now around adding $770 million for parking overall, we're seeing parking and safe parking is fundamental for the industry. And I think especially with the differences that we see between regional areas, between the Northeast, I think you have about one parking spot for every 11 trucks up there. And then you have different disparities as you move towards different regions in the US. I think additional parking helps safety, and it helps drivers not only have a secure location to park, and we see a lot in our own safety technology around detecting unsafe parking, parking on roadsides, etc. But it's also limiting the time and loss of efficiency in the industry as drivers try and look around for parking spaces available. So I think there's positive trends around investment in additional spaces will be good. Investment in technology here, giving more visibility around where spots are available, will be positive. But it's also got to be concentrated in the right areas. I think one of the things that we see, and this is a difficult problem in reality, is there's disparity across the US in terms of sometimes overcapacity of parking in certain areas, undercapacity in other areas, and kind of predicting where the demand is going to be is also a complicated thing. We've even seen with recent movements in where shipments are coming in between the East and West coasts, and volatility throughout last year on this, that even knowing the primary routes has become a complicated thing. But it's overall a good positive thing for the industry to see continued investment in this crucial aspect to safety. But it's got to be done obviously in the right way.
And having the telematics, I think you brought up a cool point. Knowing when they're parking on the side of the road, the technology is at a point now where you can almost identify suboptimal parking. So you have the big box retailer index. Could you theoretically create the Motive suboptimal parking index? And you can find the heat maps around the areas and say, look, here's your 700 something million dollars. I found a few hot spots that we maybe need to stick a few spots there.
It's definitely an area of research for us in terms of not just also like thinking about it from this sort of policy level, but also thinking about it from companies. Companies struggle with this all the time, like you talked about on the driver retention side, helping drivers pick good locations, get right rest stops, maintain their compliance, all really important for the job. And so for us, not only identifying where it is unsafe, but also providing them notifications around possible stop locations along the route, etc. These are all areas that we can really help companies improve and provide better experience for drivers. And but is an area that you got to compete a lot against, not just safe zones, your own safety, but also the compliance regulations and fueling. And there's a lot of considerations as well as getting on time deliveries. So I think as much as possible, trying to facilitate the driver experience becomes really important. And definitely it's an area that we spend a bit of time looking at the global data across all million plus vehicles and assets.
Was there any kind of surprising ones? Having the data, you also probably get types of equipment. I'm assuming when we're looking at big truck, big rig parking, it's much different than maybe where like a construction equipment or a delivery van's parking. So there's the potential with the technology now and the telematics that you can actually get a granular idea of not only the type of parking I need, but what's going to probably use it, right?
Yeah, exactly. And I think that's, that's one area, especially when we think about how we build products, like understanding the differences of needs between, the overall physical economy is such a wide array of assets, but they also often also have problems, and visibility is an issue. We try and do visibility around bad parking through kind of vision technology, etc., and identify unsafe parking and try and give recommendations around that, or notify fleet managers around it. But it's a different problem as you kind of look towards what's happening on highways and people pulling across on that side of the road to poor locations at night or unsafe locations from a security point of view. And so that's another big area, especially even within urban locations, thinking about cargo theft becoming an issue. Are only the correct people accessing the cargo bays, etc. These become important considerations. So actually, the problems are similar, but and the solutions are actually somewhat similar, but kind of the reason behind why companies are investing it in and wanting to look more deeply into it changes a little bit depending on the types of activities those companies are doing.
And it kind of flows downstream. If I'm stuck, if I don't have enough secure, well lit parking, I'm parking on the side of the road. So I'm more likely to have somebody just drive up while I'm asleep and yank a car, yank a pallet off or something like that. So it's almost like focusing on that parking issue is one of the gateways that there's plenty of downstream ripples. And then using the telematics data and working with regulators and legislators is kind of a great way. It's like a win-win because you're also helping your customers and you're helping them because they're using the tech, right?
Yeah, and it's like this has been a recurring, if you look at the ATR reports, every year you hear about truck blocking, and I think it's clearly an issue, especially we see it localized within specific types of companies, specific regions, the real issues in the day-to-day difficulty for the industry. And so, we do whatever we can on our customer side to help with ensuring safe, secure locations, and notifying them when it doesn't exist. But also, I think this is something that we're positive and looking forward to the future. It's a problem that can be solved. And so we're looking to help in any way.
Perfect. Well, Hamish, really a pleasure getting to catch up with you again. If folks want to check out more of what Motive is working on, research reports as well, checking out the blog or even getting in touch, what's the best way if folks want to get more information?
Yeah, the best way is to look for us on gomotive.com. You'll find our blogs out there. You'll find also more about all the things we're building out as a company. So please check it out.
Perfect. Well, looking forward to catching up with you again. I know it's all chaos and anarchy at the moment, given the macroeconomic situation. So I'd like to give you some applaud you for your effort wading through it because it's definitely something where it's all gas, no brakes. And looking forward to catching up again with your upcoming economic reports and releases as well.
Sounds good. Thank you very much.
That's going to be a wrap for this episode. But if you're just joining us, you can check it out on Apple, YouTube, and Spotify, wherever you may find your podcast. While you're at it, sign up for the Loaded and Rolling newsletter. It goes out Thursdays at 2 p.m. Eastern. I have one more plug coming up on May the 15th. We are having the FreightWaves Freight Fraud Symposium. It's going to be at Dallas, Texas. You do not want to miss it. Lots of shippers, customers, carriers, anyone you can imagine there's been. It's a one-day event. You want to check it out, learn about fraud, how not to do it, how not to be defrauded. Go sign up. I won't be there, but people smarter than me will. So you don't want to miss it. And then that's going to be a wrap. But if you are, we also have live.freightwaves.com for any other upcoming events. So make sure that you keep an eye on that. I know there's an Enterprise Carrier Summit coming up, and you will probably see me on that because I happen to be the Enterprise Carrier expert. All right, everyone, it's been an absolute pleasure. Thank you all so much for watching. We're going to catch you next week.